Hi everyone, welcome to another weekly Forex forecast for the week ending January 8th, 2021. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the euro, the pound, the Australian dollar, the euro versus the Australian dollar, as well as gold or XAUUSD. The US dollar continues to look weak across the board, and the euro versus the Australian dollar is breaking down nicely. However, gold could be the real story over the coming weeks as XAUUSD looks to break out from a multi-month consolidation pattern. We'll get to all of that in today's video, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. First up, we have the EURUSD, and on Friday the pair pulled back. However, I am a little bit skeptical about this price action because the volume was so low going into the holiday, and we got this immediate spike down. So we could open up a little bit higher than where the pair closed, but all in all, the uptrend is still intact here, and the pair is still breaking out from that 120 area. So if you'll remember, I've been talking about this uptrend ever since we were breaking out from this consolidation back here, and in fact, I was buying the pair for a move up here toward this 120 area. The pair spent several months going sideways between 116.15 and that 120 area, but broke out here on December 1st. We talked about this at length, and since that time, buyers have been in complete control. So going forward, this 121.50 area is going to be support. If the pair does close below that, look for a move back down here toward this 120 area. Now, I'm still in my long position that I was getting in back here on this candle, and I did announce this in the members area. If we do see a daily close below 121.50, I will go ahead and exit that long position for a profit because it would indicate that we're going to get a further pullback toward 120. However, at the same time, if we do get above this 123 area on a daily closing basis, that could provide the final push up toward 125, which has been my target for the EURUSD ever since October. So looking at the monthly time frame, you can see why 125 is significant. It's the location of these highs back here. And furthermore, this 20-year pattern is still breaking out nicely. So this is the one we've been talking about for the last few months. You can see where we had the break back here in July. The pair went sideways between 116.15 and 120 for several months. We then had this breakout that's occurring right now. So as long as we stay above this 121.50 area, I do like the pair higher up toward 125, but even if we get a rotation lower toward 120, that doesn't mean that this uptrend is over. In fact, it would potentially be a buying opportunity for that final push up into 125. So as I mentioned, I'm still long here, and I do want to add to the position if we can get a close above that 123 area. I'm not interested in shorting the euro. If anything, if I do get out of my long position, I will look to buy the pair again at support for that final push up in the 125. December could have been a big month for the pound. This is something I've mentioned several times now, where we have this falling wedge that has formed over the last 20 years or so. You can see where this level up here extends from the 2007 high. And if we look back, you can see where the bottom of this wedge pattern extends back from some of these 2000 and 2001 lows. All right, so this pattern always hinted at a move higher for the pound into 2021. Again, we've talked about this many times, and December looks to have closed above that resistance area. So as long as this region right through here around 134 holds, I do like the pound higher up towards some of these recent highs around the 143 area. So the daily time frame here doesn't really work for the pound. This is why I've been analyzing it on the weekly time frame, because a level like this that goes back for just over a year and a half, you can't play this on the intraday or even daily time frames. We needed a weekly close above it, which you can see we got right here. The pair then retested that 134.80 area as new support, and we are making new multi-year highs. So as long as this trend continues, I do like the pound higher in 2021 up toward that 143.50 area. Now looking at the daily time frame, if we do see a rotation lower into some of these recent highs, that could provide a buying opportunity. So if I draw a level there, you can see that it's somewhere right around 135.80, maybe just below it. And if I zoom out, this 136.80 area could be significant on the way up. Notice back here we have this high, which was tested last week. We then have this low back here, which creates this area between 136.60 and 137.20 or so. All right, so this is going to be significant for the pound to get above, and this could provide a rotation lower into 135.80. All right, so in other words, sellers could come out and try to defend this area between 136.60 and 137.20. If we do get a rotation lower into 135.80, I do expect buyers to come out and defend that area. However, just keep in mind, you can see how choppy this pair has been over the last few weeks, which is why I favored the euro and even the Australian dollar and New Zealand dollar over the pound, just because the price action has been a lot easier to read, and you're also a lot less likely to get stopped out. Whereas if you're trading the pound, any one of these candles, even if you got the direction right, you could have been stopped out for a loss. So if you are going to trade the pound, you probably want to keep your stop loss a little bit further back and also scale down your position size. That's just my opinion, but I do think that the pound is headed higher. That said, there are other pairs like the euro, the Australian dollar, and New Zealand dollar that do offer better price action. The Australian dollar reached that 77.40 area that I mentioned last week on the blog. If I scroll back to 2016 and 2018, you can see where 77.40 was resistance for a couple of years. So this area is going to be critical for the pair to get above on a weekly closing basis in order for it to reach higher. And one area, if we do get a weekly close above 77.40, is going to be this 8100 area, which was the double top back here. Now, as I mentioned to members last week, we do need to see a weekly close above 77.40 to confirm the breakout. A daily close isn't going to cut it because if we look at the price action back here, the weekly close did respect 77.40, however, the daily did not. Now, as for immediate support, I mentioned this last week, but if we do see a rotation into 76.20, that could provide a buying opportunity depending on how the price action goes. So if we do see an immediate rotation lower toward this area, I would be hesitant to buy that. However, if we see a gradual rotation lower into 76.20, that could provide a buying opportunity as the 10 and 20 EMAs move higher. If the pair were to close below 76.20, look toward that 75 area, which is the support area that I mentioned a couple of weeks ago. So I talked about this on the blog, and I said that Australian dollar shorts were playing with fire and could get burnt here, and sure enough, they did. All right, the 75 area held, and ever since I posted that, we saw the pair move higher up towards 77.40. So all in all, I do like the pair higher over the coming weeks and months, but 77.40 is going to be a big hurdle for buyers. So look towards 76.20 and perhaps even 75 for buying opportunities if we do see the pair move lower, but ultimately I like the Australian dollar higher up toward 81 over the coming weeks and months. I mentioned the euro versus the Australian dollar several weeks ago as it was breaking down from this weekly pattern. So notice the trend line that's been in play now for over a year, and this level appears to be the neckline of a massive head and shoulder. So we can see the left shoulder back here. We then have this high, which was the volatility earlier in 2020, and then we have this right shoulder. Now this weekly close did break the level, and that 160-150 area became resistance. So I talked about this several times on the blog, and I also mentioned recently how 57 should be the first key support. So this is going to be the first hurdle for sellers to get through in order to expose that 152 area and perhaps 146. So looking at the daily time frame, if you are looking for areas to get short, this area right around 160 or just above it could provide an opportunity. So if we see the euro versus the Australian dollar move higher, all right, so retrace up here toward this 160 region, that could provide an opportunity to get short. However, I still think that the better opportunity was up here around 160, 150. This is the one that we talked about at length. You can even see where we had this bearish pin bar. We then got a 50% retracement on the very next candle. That said, I would expect sellers to defend 160 if tested as new resistance. And again, that 157 area or just above it is going to be key support going forward. Last but certainly not least, we have gold or XAUUSD. The pair looks ready to break out any moment now. I've mentioned this $1,900 area for the last few weeks. You can see where this is the top of this descending channel, which could also be a bull flag. The uptrend has been in place now for several years. We've been talking about this at length, where gold has moved higher ever since those 2016 lows. So if we look at the weekly time frame, you can see where ever since these 2015 and 2016 lows, the pair has been carving higher highs and higher lows. And if we look at this in context, this pullback right here is bullish in my opinion. The same thing with the sell-off back here in March, where everybody thought that this was a potential top because we had the sell-off. Same thing here at 2075. We had this pullback. A lot of people are saying that this is the top for gold. I disagree. I think that all this is just a pullback. It's a bullish continuation pattern so that the pair can reach even higher in 2021. In fact, I spoke recently that if we do treat this as a bull flag, and if we use the March low as the start of a flagpole, we could see gold move as high as 2380. That's $2,380 this year. Now, my personal opinion is that gold will head much higher over the next few years. I wouldn't be at all surprised to see a $3,000 or even $4,000 gold within the next few years. But in the short term, it's all going to depend on what happens around the $1,900 area. If the pair can get above this on a daily and weekly closing basis, we could see 1930, 2015, and 2075. But a break above this area would also confirm this bull flag pattern and likely send gold much higher than even 2075. Alternatively, 1850 is support. We've seen several weekly closes above that area, and we've also now had a monthly close above 1850. So any rotation into this 1850 area should be met with buying pressure. And again, sellers have to get above that $1,900 area on a daily and weekly closing basis in order to break free and expose higher levels. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.